All right, let's start. So today's topic is insurance funding. Specifically, it's the first quarter of this year in reference to the first quarter of 2018. My name is Shafi Benhuda, and I'm the co-founder of Coverture. And as you know, at Coverture, we hope to kind of drive insurance executives to think and operate beyond the conventional boundaries of insurance. And we do that with three pillars in mind: use, knowledge, and network. So that knowledge piece is what allows us to give you this presentation today. We've started tracking insurance companies since late 2016. And what we realized that we were tracking simply insurance companies, and we weren't doing a good job because we had to expand beyond insurance in order to accurately reflect what is happening or what is shaping the industry. So we coined this term insurance under the influence, and we talk a lot about going beyond insurance. So I'm hoping that through recapping InsurTech funding for this quarter, you'll see what we mean by going beyond insurance and why our methodology makes sense. So we've had 24 rounds in January of 2019, but what's noteworthy is basically the three companies with the most funds. So Clover Health, guys, it's basically a healthcare company, right? And if you're an insurance executive, you know that healthcare has nothing on life and health and a PNC. It's just a completely different beast. N26 is a fintech company, and you're probably wondering why I've even included it in this list. Well, I'll tell you why, right? So while N26 is a challenger bank and it does offer travel insurance via Allianz, and it also has a digital distribution in place with Clark, which is an insurance manager that's mobile first. If it was to follow the kind of the footsteps of its closest competitors, which is Revolut, it will enter the insurance industry. So we like to kind of take this approach where we're also considering who's a close entrant. Acorns is another one that's like a pure fintech player. It's basically an app that allows you to round your spare change in order to save money. So not at all insurance, but they do have a product called Acorns Later. And if you're a player in the annuity space, then you definitely should look to see what they're doing. It's basically the modern take of retirement. But then if you go down the list, you're looking at CoverHound and ClearCover and Turtlemint. And this is what I'll call pure InsurTech or pure insurance. It's like single vertical. All it means is that you have to acknowledge for this differentiation. So who's coming from outside the industry, who perhaps has users versus customers versus who is simply an insurance player. In February, we had 18 rounds. Not surprisingly, the largest round, again, is a healthcare company called Ellen, which is basically the French version of Oscar. In March, we had 23 rounds, and I think what is noteworthy in this month is that the first three, the top three investments are basically international players with a full stack insurer, right? So WeFax is the brand behind One, right? And Friday is owned by a legacy insurer, and Akko is from India. But then if you move down the list, like somebody with like Shift Technology, that's basically a fraud analytics software. So we typically don't use the words disruption and innovation, but if I had to pick one, then Shift Technology is in the innovation category because they can just help a carrier in their back office claims, right? So you have to be able to differentiate between who is in the direct-to-consumer space, competing for business, zero-sum game, et cetera, versus who is an enabler or a technology provider or a service provider, and the dynamics change. So all in all, we're looking at 65 rounds for a total of 1.8 billion, which compared to Q1 of 2018, if we were to take into consideration Clover Health, which is a bit of an outlier with its $500 million in investment, then you're looking at this huge increase in funding, which is about 46% growth. But if I was to take Clover out of the equation, again, because healthcare is a different beast, then it's about 6 to 7% growth, which is an easier number to swallow. Now, if we just as an FYI, in terms of basically the companies, in terms of the investment, then the majority or 50% of the money invested is invested in companies from the US. Definitely less rounds, but more mature rounds in this quarter. And that basically correlates with the higher investment rounds. So it's irrationally free to, nothing that you wouldn't expect is basically what I'm trying to say. So more mature companies, this is not 2016 where we constantly saw new entrants or new digital brands enter the business. So definitely a slowdown in that regard. But we are seeing more full stack insurers raise money. And I mentioned Clover as one, so we'll go through the list here. Basically, Oscar is the health insurer. So Oscar, Root, and Health Direct raised money in the first quarter of 2018. In this quarter of 2019, we're seeing Clover raise money again. This time, Friday, ACO, Ellen, Singapore Life, and Health Direct. All these full stack insurers operate in the personal line space. Now, data is not perfect. And so I want to spend some time and tell you why. Because if you were to ask me about the full stack insurance companies, and I would send you to coverture.com, and you can, click all the right filters and basically understand who raised what. So here's a company like WeFox, which is basically, part intermediary, part insurer, but they came to the market with a digital insurance manager, and they sell through brokers, but then they've launched one, which is a full stack insurer. So how are you to kind of divide their 125 million funding round based on, the right allocation, whether it's in the direct to consumer arm or whether it's kind of that B2B-C model? And maybe that's even the wrong question to ask, because all in all, this kind of A to Z strategy that they have is working really well for them. So it's just kind of an FYI in terms why data in itself is not perfect. You always need that kind of side note for somebody to explain what is happening in the space. And we've seen companies raise money and not yet emerge or about to emerge. So I'll go through that list. And this is based on companies that raised money in the first quarter of 2018 and this quarter. So Honcho is from UK, and they're going to create this market where you can bid for business. Basically, a policy holder will put out their insurance request, and hopefully insurers that are interested will make an offer. They raised 1 million last year, and just look for them. They're going to launch in May 1st. Avino, after a rebrand, raised 5 million this quarter, and they're basically looking to launch auto insurance for autonomous vehicles. And then you've got a company from Manila that's basically in the B2B space. So I'm assuming once they have one client or one insurer, then they'll basically be live. But the whole idea is to provide technology to make insurance accessible. And then you also have a company that went down under, and My Bag raised not a lot of money, right? They crowdfunded 35K last year. But in a total, they raised a bit over 400K, and they were basically insurance for electronics. I'm sure that they have a better way to describe what they were doing, but at the end of the day, it was product insurance and data protection and laptop insurance, right? So electronics plus an element of data protection. So it's micro insurance as you can get. So in Coverture, we also track investments done by insurers. I'm not necessarily going to call it strategic. It all depends on the round. But this quarter we had 25 insurance investments. And what is interesting is basically what I've highlighted in yellow, and these are companies that operate not just in the insurance vertical, right? So if I look at Returnly, this is a company that operates in the e-commerce space, basically to make it easier for clients to make returns. Outdoorsy, backed by Aviva with a partnership with Liberty Mutual, operates in the sharing economy with the ability to rent your RVs, right? So it's interesting to see. Some of it is quite obvious, right? If it's health tech, it's really close to home. If it's fintech, it's typically close to home. But if we're going to start seeing more of the e-commerce companies partner with insurance companies, that will be interesting to watch. All from the perspective of customer acquisition. However, so in this quarter, we had 822 million invested by insurance companies compared to 1.4 billion that was invested the quarter of 2018. I think what's noteworthy in Q1 of 2018 is really kind of this notion of a company called Tomorrow, right? So they operate in I'll call it maybe legal tech afterlife, right? Because they do digital will, and they started with a digital will. They also sell insurance. So it's kind of this backdoor selling of insurance products. Again, I think the game is in distribution, especially in insurance. So anyone that can cut down customer acquisition costs, I'm not suggesting that Tomorrow is actually doing that, but at least that's their attempt. So we'll see if they turn to be successful. And as I mentioned, some of them are like the fintech is pretty much a no-brainer. So USAA investing in Roostify because Roostify operates in the lending space. Well, it makes it easier to offer insurance and at the point of sale. So all in all, I'm going to say that the takeaway between the first quarter of last year and this quarter is basically a decrease of what we call investments in pure insurance companies. So these are companies that operate in one vertical. And when we say look beyond insurance, right? So healthcare is kind of the obvious, but fintech, maybe travel players, right? Almost anybody nowadays can become or distribute an insurance product. And it seems like there's a lot of exploring to do here. So that's really the takeaway of InsurTech funding. And let me see. Yeah. Okay. So I just got a question. Will these these slides be available? So the answer is yes. All right. So that's all for today. And usually these webinars will be about 10 to 15 minutes long. The whole idea is to pick a research topic that we can kind of like the Coverture format, be quick and to the point, and share this analysis that maybe is hard to convey through just kind of a recap of news. So thank you for joining in, and I'll catch you next week.